What's up, team? Okay, so we have Coinbase, PayPal, and Square earnings today. Let me know your predictions for these. And yeah, we'll see if we get something good. Hey, what's up, Sammy, G, Mark, Lily? Hey, thank you guys. We appreciate it. Do me a favor as you join the stream, hit the subscribe button. We're also going to start a poll. What's your bearish on Coinbase? The Q3 earnings today, right? Yeah, Q3. Bullish or bearish on Coinbase, Q3 earnings. Again, we also have PayPal earnings today. Hey, what's up, Antonio, Bill, Edward, Mark? Hey, my day's going okay. What's up, Edward? All right, guys, SPY up to 373.30s. We have Coinbase at $57 right now, roughly $57. All right, so here's the expectational numbers for earnings right now. So PayPal is expected to come in at 96-cent profit per share, with $6.82 billion in sales revenue. Block SQ is expected to come in at 23-cent EPS profit, $4.49 billion in sales revenue. Coinbase is expected to come in at a losing $2.23 loss per share in EPS, with $642.76 million in sales revenue. You can see Coinbase actually starting to dip a little bit ahead of their earnings here. The SPY is slightly green today, maintaining honestly a nice little trend today on the SPY. PayPal, if we look at this here, currently at 77.40s. Corsair earnings, we'll cover all the major ones. So I mean, really, we've got a lot of time before Coinbase actually drops theirs. So yeah, big stuff dropping today. We've got PayPal, Block, Coinbase, Starbucks, Twilio, Carvana, Cloudflare, DoorDash, Expedia, Warner Bros, Bill.com, Open Door Tech, Virgin Galactic, which is Space, SPCE, Dropbox, a lot of other stuff too, to be honest. Corsair, Farmer Bros, GoPro. The biggest one's Coinbase, PayPal, Starbucks maybe, but in terms of just general income, Starbucks actually makes the most. They make 843 in sales revenue. For Starbucks, 8.43 billion in sales revenue. The next one followed by that is PayPal. The next one following that is AMGN. Next one following that the next one following that is Block, and then it kind of follows back down. In terms of sales revenue, and Coinbase is actually one of the lesser profitable companies out of the few, but in terms of popularity, it's up there where people are going to want to listen to their earnings report. Starbucks. Corsair is reporting. So again, here's the schedule right now. So Coinbase isn't scheduled to drop their earnings until 4:20 on the dot. Until then, we've got Starbucks at 4:05. We've got Twilio at 4:05. We've got Carvana right at 4 p.m. DoorDash at 4:05. Expedia at 4 p.m. PayPal's not until 4:15. At 4:10, we have SQ. Twilio at 4:05. We've got Space at 4:05. Corsair's right at 4 p.m. on the dot. So is GoPro at 4:05. Funko Pop at 4:05. And there's a bunch of them today, man. These are all like the medium cap companies. They're not huge. They're not like AMD. They're not like Microsoft or Apple or Disney or Tesla or anything like that. But they're big enough that people know about them. PayPal, Block, Coinbase, Starbucks, Twilio, Carvana, DoorDash, Cloudflare, Expedia, Warner Bros, Bill.com, Open Door Tech, Amgen, Virgin Galactic. So it'll be fun to see what we get, but a lot of them drop at 4. We'll try to cover all of them the best we can. What's your opinion on SQ at current price level? So SQ, big company, had a lot more hype about it about a year ago, obviously. But big company, just like everything else in mid to large caps, it's for the most part lost a lot of value over the last year. You can see back at the beginning of 21, so about almost 2 years ago, it was all the way up at 260s. It is now in the last year gone from $60 a share up to 90s, all the way down to 54s where we're sitting now. But I mean, at the same time, just to be fair here, the broader market as a whole has dropped pretty dramatically over the last year. So in that regard, we've been in a bear market for a while now, and I can't really knock SQ for the bear market. So I think it's a useful product. I think a lot of people use Square products. I use Square usually at least a few times a year. From other smaller companies, I think Square is a great idea for small companies. And so I think it has a use in small business, and I think because of that, it might be a nice little bet long term. I don't think there's any real competitors to this quite yet. The only competitor here, the only thing that might be dampering the future outlook for Square is the fact that you can tap your card now. So you can just kind of tap your card. But I still don't think it matters. I think it's a cheap option to get involved with credit card scanning if you have a brick and mortar business. The only problem is brick and mortar businesses, they're becoming less popular, of course. Coinbase right around lows of the day here, right at 56.40s. Well, I mean, there's a few standards to make something blue chip. The biggest one is probably whether it's listed on a major exchange. Whether it's listed in an index fund like the S&P 500 or the Q or something like that. You know what I mean? That's usually a good gauge. That's blue chip. If you look at the definition, which I just did, just means a company with an excellent reputation. Large, well-established, financially sound companies. And again, if you look at what constitutes being listed on an index fund like the S&P 500 or the Q, then those are what we really refer to when we're talking blue chips. Yeah, I wonder why Google's dipping so hard. It's mostly the bear market of tech. I think I'm going to buy this here, though. I'm assuming that the Fed rate hike decision made this, but I think that's going to make people not want to use them. All right. I see. Coinbase earnings are scheduled to drop at 4:20. PayPal earnings. All right. So again, Coinbase earnings are scheduled to drop at 4:20. PayPal earnings are scheduled to drop at 4:15. Block is scheduled for 4:10, and Starbucks is scheduled for 4:05. Coinbase breaking lows. Yeah, we'll cover all of them. We'll cover DoorDash, everything. Like, we're going to cover all the major ones as soon as they come out. All right, so the Bank of England's man says that there's still a lot of momentum in drivers of inflation, repeats the Bank of England guidance that rates do not need to be as high as the market suggests. Yeah, we'll cover Carvana. Listen, we'll cover all the major ones, guys. Again, we'll cover all the major ones. Yeah, we're gonna take a small position. I mean, define small, but we're gonna take a small position of Google here. We're gonna buy the dip. We just bought 100 shares of Google. It's just down so much. I just think that we're probably gonna bounce back from where we are now. How long that's gonna take, I'm not sure. Yeah, we'll cover Carvana, DoorDash. Yeah, I mean, listen, these are the earnings we're going to cover. PayPal, Block, Coinbase, Starbucks, Twilio, Carvana, DoorDash, Expedia, Open Door, Virgin Galactic, Dropbox, Corsair, GoPro, Funko Pop, GoDaddy, Yelp. Might cover some more too. If you guys have anything else you want me to cover, just remind me. I'll try to look at it. Yeah, let me send out my newsletter here. Send that out. Again, if you haven't joined our newsletter, be a part of it here. beginnertrading.net/members. You can join our newsletter for free. Get it mailed out for free. Yeah, I'm kind of buying up this dip right now. It's dropped enough. But yeah, we're getting ready to send our Coinbase newsletter out, PayPal newsletter. But yeah, we ended up buying the dip into Google here. It's just down so much, I think we'll probably eventually rebound. So a little dip buy into it. All right, team. And you can see SPY dipping into the close. Coinbase already broke lows here. Also, do me a favor, hit the like button when you join us. We only got 17 likes. We can do better than that. Massive PayPal sell-off. Well, the market's kind of selling off right now. It's not really just PayPal. It's kind of everything. All right, we're sending our Coinbase newsletter out now. There we go, and we're ready. Again, Coinbase breaking down is at $56 a share. There we go. Yeah, join our Discord. Yeah, we have a Discord. We're going to post this to our Discord too. Starbucks, Apple did right. And again, let's look at our poll here. So we got our poll going over for Coinbase right now. We got about 74 votes. 76 people are bearish, or 76% are bearish. Let's do our Twitter poll as well. We forgot to do our Twitter poll. All right, guys. So calls or puts. If you want to do our Twitter poll, you can. We're going to do a crypto show today after everything as well. If you want to vote, I do like the edit button now on Twitter. All right, if you want to vote on our Twitter poll, we appreciate it. Here's the link. Check it out. Again, we got about 9 minutes. It's the link on Twitter. Yeah, I started to think maybe I should do the PayPal earnings, but Coinbase I think is a little bit more popular right now than PayPal. So we'll probably just keep doing Coinbase. Got a few votes already. RGT crypto going to rev up later. Yeah, how much do y'all think this is going to affect the crypto market? We got almost 100 votes about Coinbase. The actual Coinbase numbers, the bell closes in 9 minutes. With that, again, I'll put the schedule in chat because this will be helpful. So give me 1 second. I'll organize a schedule for when the earnings are actually going to release. All right, so again, Coinbase is at 420. PayPal is at 415. Then we have Starbucks at 405. We've got Twilio at 405. Dash 405. Well, the market bounced back. Everything's kind of crashing right now. And then we got a bunch of other ones too. Carvana drops at 4 p.m. on the dot. Now, this is not an order. I guess it kind of is in order, actually. Okay. Here's the actual order of drops right now. Here's the order of drops. Here, let me fix this. Hold on, my bad. Yeah, here's the schedule right now, guys. We go live 1 to 2 times per day, depending on what's going on. All right, we got a few votes on our Twitter page. 86% are saying puts on Coinbase. 14% are saying calls. Again, the question is, how extended are we heading into today, though? I mean, everything's just down brutally right now. Brutally down right now. And so with that, I'm starting to add to positions, to be honest. I'm finally, I haven't bought any swing trades over the last like week or two, really. I'm finally starting to add to a Google position now. Yeah, I mean, just no self-promotion here, Eric, you know. Too many scammers, bro, for me to vet, you know. I just snagged some Google as well. Yeah, Google just seems objectively cheap. Right now it's at 83.50s. You know, Google a year ago was at 150 bucks. I mean, now remember, Google is a large cap company, and so it's still fine. And it's Google. I mean, it owns everything. All right, guys. We're starting to get a little bit of rebound. We're at 56.10s for Coinbase. Again, the Bank of England warned that the country is entering the longest recession in modern history. All right, and honestly, Google's still breaking down pretty big. Look at the SPY turn here. So SPY finally going pretty red. Coinbase breaking down pretty heavily. We got less than 4 minutes until the actual data comes out. Yeah, I mean, I'm a hidden economist. Do you think these earnings will affect the SPY? Some of them will. Some of them won't. It depends. Coinbase will affect cryptocurrency and maybe the SPY some. But PayPal will certainly affect the SPY at least a little bit. Starbucks will as well. So it depends on which ones you're looking at. I don't know. I tend to be a dip buyer here. But who knows, man? We could just keep crashing down. All right, guys, 83.50s on Coinbase. Let's see if we start to stabilize a little bit, or 55.80s, I'm sorry. That's Google, I just said. Again, let's see if we start to stabilize a little bit here. Market's been dropping dramatically. I mean, it's not the worst day ever. People were all doom and gloom after this, but this really isn't that bad, to be honest here. We got about a minute left. This isn't really the worst ever. You know what I mean? Like, this isn't great, but it's not, like, terribly down, you know? Is it good? No, but it's not like terribly down. You know what I mean? So, we're at what are we at right now? Yeah, we're at 370s. So, I mean, if we're at 370s, it can't be terrible. If we look at like our 20-day chart here, we're still green in the last 20 days. So, I mean, in the end, I think you have to look at it from that scope. You can't really just say, oh, we're crashing. It's the end of the world. I think that we're still okay. We might turn down. We might get worse. I'm not saying we won't get worse, but I'm saying as of right now, it's not the end of the world. We're also going to put it in sub-only mode here, guys. So if you haven't already, hit that subscribe button. We appreciate you all. Again, we got PayPal earnings. The ones dropping in 10 seconds are going to be Carvana drops in about 10 seconds, guys. So be ready. We'll cover that as soon as it drops. Let's get ready to see what Carvana does. CVNA, they drop in 10 seconds. Or they should be out now. Let's see what they show up as. Here's Carvana. Again, Carvana numbers are supposed to drop right now. Let's see what they show up as. I don't see anything yet. Carvana. Nothing yet for Carvana. They were supposed to drop right at 4 p.m., but we're not seeing anything yet. What else do we have at 4? We have Expedia. We can look at what Expedia does. Nothing out for that one either. Carvana hasn't dropped yet. SQ hasn't dropped yet. AMGN, nothing yet on that one either. All right, patiently waiting here, team. Corsair. All right, Corsair posted a third quarter loss per share of 9 cents, third quarter adjusted EPS of 8-cent profit, third quarter revenue of $311.8 million. Here's the Corsair numbers in chat. 8-cent profit beat 2-cent estimate. Sales of $311.8 million beat the $299 estimate for Corsair. Carvana's actually moving up a little bit, but there's Corsair. Carvana just dropped. Carvana's not out yet. Amgen dropped EPS of 470, expected 444, better than expected. Revenue of 665, expected 656. So Amgen beat on both metrics too. Carvana is ripping up. It's at 1460s. I don't see the actual catalyst here yet. Coin numbers aren't out yet. Starbucks. Nothing out for Starbucks either. Carvana numbers aren't out yet. It's pretty sideways. We did have Amgen do better than expected. AMGN. We had Corsair do better than expected. It's back up to 1260s. All right, nothing out for any of these other ones. Starbucks not out yet. Corsair dropped good numbers here. Again, we'll put the numbers up on chat for Corsair. Yeah, here's the Corsair numbers. Coinbase doesn't drop until 4:20, so Coinbase doesn't drop for 17 minutes. Starbucks. Like I said, I posted the schedule earlier. Here's the schedule if you want it. Sorry if it's a little messed up. I forgot to. There's the schedule in chat if you guys want to see it. SQ's not out yet either. Again, most of the major ones are waiting until like 4:15. Coinbase is up a little bit. Here's Corsair. Amgen dropped theirs. They beat on both metrics. Corsair dropped theirs. They beat. Still pretty break even though. Not really a big one. PayPal still got some time until theirs comes out. Coinbase is up a little bit. Starbucks is moving. Starbucks is sideways as well, so nothing out there. WBD just dropped their results. 257 EPS, expected 243, so better than expected EPS. Expected 243, showed 257 EPS. Revenue of 2.7 billion, expected 2.68 billion. So WBD posted a beat on both fronts. Coinbase starting to move up a little bit here. Again, PayPal's not out yet. Starbucks isn't out yet. Here's PayPal right here. Neither of these are out with their numbers yet. We'll cover them as soon as they drop. They're just not dropped yet. Y'all can hear the music, correct? Again, y'all do me a favor. Hit that sub button if you haven't already. We appreciate it. All right, Coinbase up to 56.40s here. We got PayPal at 77s. Dropbox out. I don't see Dropbox numbers yet. Dropbox posted. Dropbox is out. PayPal just ripped up to 77.20s. All right, so here's 405. We got a lot dropping right now at 405. We got specifically Starbucks coming out right now. All right, Starbucks just dropped. They dropped EPS 76 profit, 81-cent non-GAAP EPS profit per share, driven by strong September performance, reinvention materializing. Starbucks fourth quarter just EPS 81 cents, expected 72. So here goes Starbucks running up here. So Starbucks just dropped We'll put this number in chat as well. Here's Starbucks right here in chat. We'll put it in chat. Again, if we look at Starbucks, they're popping up on this. They had a beat on both metrics. So Starbucks dropped. Dropbox dropped, but they didn't make it easy to understand. So we could look Dropbox up. Look at Starbucks fly up here on the earnings beat. Starbucks flying up here. Coinbase, are they out? Coinbase dropping down. It looks like they might be dropped. Coinbase up to 57s here. Wow. Is Coinbase out? I don't see it. Volatility for Coinbase. Look at that. It's at 56. I don't see the Coinbase numbers anywhere. So if they're out, they're not showing up on my end yet. Could be Starbucks influencing it. Starbucks flying up. Maybe it's PayPal related, or PayPal's out yet. No, PayPal's not out yet either. Look at Starbucks rip it up. I mean, it's all depending on how you define flying. Starbucks up to $88 a share. Coinbase getting ready to test lows here. Again, nothing out for them yet. Yeah, but Corey, it's not about that. It's about expectational numbers. So it's like by the time we had our last earnings call for Coinbase, crypto was already doing bad. And so all right, so the shareholder letter is released for Coinbase. All right, so it looks like Coinbase earnings are out, maybe. Coinbase is mostly moving sideways here. We do have PayPal. Block posted their numbers here. So Block just dropped their numbers. They dropped EPS of 42 cents, better than the 22 cents. So almost 100% better than expected. Revenue of $4.52 billion. Warner Bros. Also released as well. Here's SQ. They beat on both metrics. Or no, it was mixed results. They beat on both metrics. I'm sorry. So yeah, here's Block's numbers here. Block boasted better than expected results. So yeah, SQ dropping here. Twilio getting hammered. Twilio just posted loss per share, adjusted loss per share of 27 cents. Fiscal year adjusted loss per share. Here's Coinbase. Coinbase just dropped theirs. I'm going to post these numbers in chat here. Wow. Revenue of 590, expected 650, transaction revenue of 365 or 366, expected 461. A big miss for Coinbase here. Again, Coinbase missed 100 million sales revenue miss here, so a big miss for sure. They are now breaking lows here. Look at them. Look at this drop after this release here. So again, Coinbase just missed big. PayPal. I don't think PayPal drops until 4:15. Coinbase released a little bit early. Quarter 3 sales of 576 million, missed the 659 million estimate, so a big miss for Coinbase here. Starbucks is still popping up. Again, we had SQ that beat on both metrics. They're up to 60.4. Third quarter sales of 576, missed the 659 million estimate, so 80 to 90 million dollars worse in terms of sales revenue than expected here for Coin. You put this up. You see those numbers in chat right there. So big miss here. I mean, they're not dropping down a ton relative to the miss they just posted. I'm still not sure what the EPS is for Coin. We're still waiting to find that. You look at their shareholder letter. Starting to rebound a little bit. SQ at 60s. Yeah, Dash. Dash release, but it's not really being reported on very much. Dash beat. SQ up to 60 plus. Waiting for PayPal now. PayPal drops soon. In 5 minutes or so. 4 minutes. What is the Coinbase EPS though? They expected 223 loss per share. So it looks like they haven't dropped their actual EPS. We're getting it trickle out here. Maybe the rest will drop at 420 like it's scheduled to. It's 412 right now. So SQ beat on EPS. Starbucks beat on EPS. Expedia big miss. Warner Bros missed. Bill.com beat. Amgen beat. Skyworks beat. Team missed. Dropbox beat. Corsair beat. GoPro beat. GoDaddy beat. SQ beat. You can see SQ ripping up. Still waiting for PayPal and the EPS for Coinbase. All right, here we go. Coinbase Q4 total trading volume of 159 billion. Monthly transacting users is 8.5 million. So again, there's Coinbase's some more data getting released here for Coinbase right now. Q3 subscription and service revenue came in at 211 million. So you can see these numbers in chat. PayPal starting to move up a little bit. We still have about 2 minutes before PayPal numbers come out. A big rip up for PayPal. Still waiting here. We don't actually get the EPS for Coinbase yet, though. Again, Coinbase posted Q3 sales of 576 million, missed the 650 estimates. Fourth quarter total trading. All right, Coinbase starting to rebound here on their third quarter subscription and services revenue data getting released. All right, so Coinbase expects, so we just got some guidance numbers for Coinbase. They expect their fiscal year 22 annual average MTUs to be slightly below 9 million. They expect subscription and service revenue to be more than 700 million here. So not bad. They're actually moving up a little bit from this here. So for Coinbase up to 5640s. Now, again, we don't really have their EPS yet. PayPal just popped up big here. Here's PayPal rip. PayPal just dropped their numbers. Waiting for the actual PayPal reflection here, but it looks like PayPal is printing, but we don't actually see it. It's up to $80 yet. But yeah, there's PayPal flying up here. And then coming all the way back down for PayPal. Still don't see anything printing yet here, though, for PayPal. I'm looking at a lot of different sources. Nothing yet. PayPal dropped EPS of 108, better than the 96 estimates. Revenue of 6.85, better than the 6.82 billion estimate. So a slight beat on both metrics for PayPal. Slight B. You can see these numbers right here. We'll put these numbers up in chat. Again, there's the PayPal print. Still waiting on Coinbase to come out with what they're showing up as. But PayPal turning around right now. Big rejection here for PayPal, all the way down to 74.60s. But again, EPS of 108 beat the 96 estimates for PayPal. Big reversal down to 74s. Coinbase up to 56.50s. Microchip Tech posted. PayPal raised their guidance, but they're still falling here. So again, we're still waiting for Coinbase to show something favorable here. And then you can see the Coinbase numbers. Microchip Technology dropped their EPS 146, better than the 144 estimate. Sales revenue of 2.07 billion, better than the 2.06 billion estimates. Okay, thank you, Jeremy. All right, yeah, so Coinbase EPS 243 versus 223 estimates. Big miss in sales revenue. So mixed results for Coinbase here. Guidance down on PayPal. I see PayPal raise their guidance according to Benzinga. I'll have to check. Let me see if we can find the data here. Hold on one second. PayPal dropping down dramatically, though. All right, so Monster dropped basically a slight beat for Monster. 60-cent EPS, 59 profit. Again, I'm not sure. I don't see the PayPal guidance. Does anybody show what the PayPal guidance is? Let me look this up on Twitter. PayPal third quarter EPS 12 cents updates guidance. Big drops for PayPal though. Fourth quarter guidance for PayPal is 7.7 billion. Again at 67. Coinbase is mostly neutral. Yeah, PayPal, Twitter's kind of where I'm looking it up. I see a few different things though. See, we're getting multiple interpretations. Some people are saying PayPal raised guidance. Some people say they lowered it. Right, so you have PayPal sees fiscal year revenue of 27.5. They expected 27.85. So they actually came in a little bit lower than expected for PayPal quarter four revenue. At 738 versus 773 here. So yeah, PayPal actually lowered their guidance, and that's why they're dropping again. They saw fourth quarter revenue at 7.73 billion, expected 7.7 or 7.73. So PayPal actually lowered guidance. We'll put, you can see right here in chat. DoorDash just dropped. They posted adjusted EBITDA of 87 million, expected 59, revenue of 1.7, beat the 1.63 for third quarter for Dash. It's not fake news. My guess is that they're talking about fiscal year. And this is referencing fourth quarter. PayPal's down 11%. 11%. But yeah, PayPal had lower numbers here. Again, Coinbase not really reacting the worst. Yeah, listen, no movement is better than downward movement here. But PayPal is just tanking down here. You buying this dip? Let me know. I'm not really a big believer in PayPal for a few reasons. Number one is that I think crypto is going to replace it. And so Coinbase still at 55s here. Are you guys buying this dip? Again, the earnings call for Coinbase isn't for about an hour here. 5:30. It's only 4:30, 4:20 right now, really. So we still got time for this. Don't buy the dip. Yeah, I'm not buying the dip with PayPal for sure. Google, I'm a little bit more likely to buy the dip. With the understanding that it could be a long-term hold, like longer term. All right, we're at 83.60s right now for Google, 83.60s. All right, guys, we're at 68 right now for PayPal. Big dip. Coinbase actually did not tank after their earnings report, which is a little bit different than last time for sure. They actually did not take. A lot of the market is already at attractive valuations. Problem is the macroeconomic situation is at an unprecedented point of time. Yeah, I mean, that's the only thing. I kind of agree with you there. If there is risk, that's what the risk is. But I mean, in hindsight, though, I think you got to look at things deep into the future and understand that we're at massive discounts right now. All right, Google at 83.60s. Coinbase at 55.50s. EOG dropped their EPS at 371, revenue of 7.59 billion. And Block did post some numbers here. Again, we're waiting on this. Yeah, it doesn't start until 45 minutes, give or take. That's when the lobby even opens up here. Cloudflare down big on good earnings. Yeah, I mean, that's kind of the earnings market, though. Sometimes you just don't know what's going to happen here, you know. Again, y'all do me a favor, hit that subscribe button if you haven't already. We appreciate it. All right, guys. PayPal still testing these lows here after lowering guidance. All right, team Coinbase ripping up at 58s right now. So getting some buys coming in for Coinbase. Coinbase expects, again, we put this up before. Coinbase expects fiscal year 22 annual average MTUs to be slightly below 9 million. They expect subscription and services revenue to be more than $700 million. Yeah, looking at our polls here, let's see how many people were actually right. So we actually got some green reaction from Coinbase, right? So green reactions here. 83% said puts on YouTube. 83%. If we look at it just in terms of how many voted bull or bear, 70% were bearish on Coinbase quarter 3 earnings after 350 votes. How about the Astros tonight, man? Yeah, we'll see what the CEO says for guidance. That's going to be what matters a lot. And we'll get ready to cover that. It's in about an hour. So y'all be ready. Again, hit the sub button if you haven't already. We're at 67 for PayPal, Coinbase all the way up to 58, so it's looking good. Again, we bought the Google dip. Again, like somebody else said, I saw somebody say basically the same thing. Here's the good and bad things about this dip buy I just got into. Objectively, we're cheap. Like in terms of like distinct value, we're cheap. But at this current point in the economy right now, there's a lot of unknown. There's a lot of question marks, you know, and so to that degree, we could see some craziness, and if that happens, then I could lose on this trade. Either way, we'll be fine no matter what, but yeah, that's kind of what's going on. Dude, Coinbase did have bad earnings. Yeah, but I mean, we're not talking about what the actual earnings were. We're just talking about what the stock did, you know. Nah, Phillies don't have this, man. We threw a no-hitter yesterday, bro. Again, let me know what you guys think. Coinbase broke highs up to 58.20s right now. PayPal at 67.20s. EOG Resources dropped their numbers. Still got some time here before the actual earnings are released. They come out in exactly an hour. Exactly an hour. Now, we did buy the dip in Google. Our entry right now is 83.70s. So we did buy the dip in Google. Nah, we're all right. I get it. Honestly, we need to get Verlander out of there, bro. Verlander and McCullers, bro. They just need to lay it up, dude. They need to stop. You know, Verlander's just looking weak. McCullers tipping his pitches. PayPal rebounding back up to 68s after lowered guidance here. Coinbase, let's see if it holds 58. I think 58 is a reasonable support or resistance level right here. So again, we'll see if it is. PayPal will rise. I don't know, man. I think crypto replaces PayPal to a certain extent. I think that's the thing you got to look at and really consider is how much does crypto replace PayPal? And if it does, what does that look like? You know? Again, Coinbase has reacted positively to this. $58.50s for Coinbase. PayPal trying to move back up here. Crypto too volatile to be used as a currency in the near future. Well, as a pay tool, I think it's still got value. And it just right now the big problem. Coinbase ripping up almost up to $60 a share here. Previous closing price is right around 61, just under 61 at 60.7s. And so to that degree, you know, it's right around that level. So we're right up to $60. PayPal trying to move back up as well, over 68. $68.8, $68.5 for PayPal. Still moving up. Coinbase right at $60 a share. Why is Coin even up? Well, Coin worse than expected EPS, better than expected guidance numbers here. You know, I guess is what my guess is the reason why it's up. You know, if we look at Coinbase, better than expected. I know actually the EPS missed as well. Fourth quarter total trading volume was good. Monthly transacting users was good. Third quarter subscription and service revenue I think was positive. And so I think that's a lot of the reason it's reacting on the upside. Up to $60 a share here. Did you put the PayPal dip? No, not really my style, man. PayPal, I just don't trust it long term, unfortunately. So we're getting a little bit of a pullback at 59.50s right now. Bullish on coin? Yeah. PayPal starting to rebound, almost back up to 70s here. Coin at 60s. Again, PayPal up to 70.18 or so. What's up, Liv? To the moon. Bro, and anything anybody ever says to the moon never goes to the moon. AMC never went to the moon. GameStop arguably did. You know, again, the problem with AMC and GameStop is just the sensationalizing of them. You know what I mean? Like most people in that situation enter the market late. And so in that regard, most people just didn't understand. Coinbase just went green on the day, guys. Just went green on the day, up to 61s right now, 61s. So Coinbase just went green on the day, up to 60.7s. But AMC GameStop's problem was simple. They didn't have the like GameStop squeezed. But like something I've noticed here, and one of the big problems is like most of the people that took advantage of the squeeze on GameStop were rookie traders, right? As much as I hate to say it, they were rookie traders. And so GameStop squeezed, and then because they were rookie traders, when it was time to get out of it, they didn't, you know? And so instead of getting out of it like they justifiably should, they sat in it and then just kind of watched all their profit go bye-bye instead of just being like, okay, we're up to $500 a share here for GameStop. Let me take profit. And then after that, they thought everything was a squeeze, right? So AMC, they thought would just go to 1,000 plus. In the end, it didn't. And so it just kind of curdled back down. And unfortunately, that was the end of, you know, a lot of traders' accounts. You know what I mean? So again, they had to watch AMC. AMC was never meant for a squeeze like that. 30% short, 20% short float, you know, 500 million float stock, just not large enough in short float. Too large of a float, and it just wasn't meant for like a big parabolic squeeze. But like a lot of rookie traders got involved, and you know, it is what it is. Coinbase moved it up, tested that previous closing price, got rejected at 60.7s. Again, we're still kind of sitting here waiting for the meeting to start. It's got 35 minutes before the conference call actually even opens up yet. So we're just kind of patiently waiting here. Bed Bath & Beyond made it 30 or 40 or whatever it was. I made money on Bed Bath. Again, squeezes don't last forever. If you ever gotten caught in a squeeze and you watch, there'll be some type of squeeze in the future where you'll see a stock make crazy gains. The overarching concept to keep in your head is that they do not last forever. And so don't be one of the smart traders that takes profit. Don't listen to the people telling you to diamond hands it and never sell. Again, they're trying to prop up their own positions. They don't last forever. If you see a stock get squeezed up dramatically, take profit into it. That's what you do. That's how you make money. I made money on the Dogecoin move. I made money on Dogecoin. It went up to 65. I sold Dogecoin. You know, I bought it at like 12 and a half cents, sold it at like 60s. And my mom messaged me and said, hey, you know, I hear about Dogecoin. Should I buy Dogecoin? I said, no, Mom, don't do it. You know, I wouldn't do it at least. I'm not going to tell you what to do. Not an investment professional. Don't sue me. Everybody at home. But sure enough, in hindsight, I was completely right about Dogecoin, and Dogecoin ended up coming all the way back down. Only recently broke 10 cents again after sitting at like 6-7 cents for a long time. And so again, squeezes do not last forever. You know, AMC didn't, GameStop didn't, Bed Bath & Beyond didn't, and nothing else will either. And so it's really important to not listen to the dummies who are telling you never to sell. You know, they'll tell you that these terrible fundamental companies that are squeezing up because there's so many people betting against them that they're going up because of the squeeze, but just mostly from shorts covering and needing to buy their shares back. And so it's, snowballing, but they're terrible fundamental companies, and, people get talked into investing in them. It's the worst mistake you can ever make. Don't do it. You see it happen a lot. I see it a lot. Yeah, it was funny, man. Like, we actually got a lot of views during the AMC. Like, one of the reasons we grew a ton was because we covered the AMC squeeze, and we had like a ton of people. We had like thousands of people there. And so, we got a lot of views, but then I was being honest with people. When GameStop was at $500, I was telling people to sell. I was like, yo, y'all need to sell, man. Take profit. I'm selling. Y'all should too. And again, I had people calling me idiots. People were calling me names. They were screaming at me. They were telling me it's going to hit 1,000. That I don't know what I'm talking about, and like all this stuff. And then I just had to watch it go down. I had to watch everybody just kind of say, oh no, I just lost X amount of money. And it's like, well, I'm not going to say I told you so, but I did. And I had to kind of watch it happen. And then I think when the AMC YouTubers realized that I wasn't just going to kind of mindlessly tell people to never sell, they kind of went and watched somebody that would just kind of chill it, pat each other on the back, and never tell the people the truth. And now AMC, if we look at AMC here, AMC is now like $5.70, and all the AMC YouTubers are just kind of like, hey, we're not going to cover AMC anymore, guys. We're going to go talk about something else now. Don't remind me about AMC because, manipulation, hedge funds, manipulation, naked shares. All right, guys. So again, we have the earnings call. It's in 45 minutes. Yeah, Desiree. It was funny. Cost was great too. But you got ape though. Yeah. Yeah, it's unfortunate. Yeah, dude, Sundial, SNDL, bro. I never heard the end of Sundial. I actually bought SNDL a long time ago. And I can show you guys the chart. I've talked about this before. And again, all of my trades have been mostly documented online for the most part, right? But like, I'm trying to think of when it was. I want to say it was back here in 21. I want to say it was last year. I made money on SNDL. I can't remember where I bought it. It might have been here, like November of last year. It could have been back here. But I remember SNDL ripped up. I don't know if it's been split since then or what, but it ripped up. I remember taking profit. I remember I wrote it up from like $1 or whatever. I can't even remember where I bought it, but I wrote it up big. And when I sold at like $4 or $5 a share, from up like 300% or whatever it was, I had so many people yelling at me, telling me I was wrong, and it never ended up going up in hindsight. And so it must have been one of these moves back here. But I ended up making like a ton of profit from it. I had people getting mad. CEI was another one where people were just, again, you get these stocks that are just terrible companies. These are just terrible companies, right? And like, you can't even believe the due diligence about them, because like, it's not accurate. Like they're so sensationalized, like Wolf of Wall Street, Aerotine International sensationalized, that it's like people invest in them and they're terrible companies. So people lose money, right? And then it just kind of turns them into the shill of a penny stock. Like, hey, yo, everybody buy CEI. It's going to go to the moon. And then it never does, and then sure enough, they just don't ever say anything about it again. I see it all the time. It's an incredibly predatory market. It's one of the reasons, like, I just don't invest in penny stocks. They're most of the time you're just going to lose money. Even if they have good, quote, DD, quote unquote DD, you can't even trust it really. It's so sensationalized that like, you don't really know. If you think you really know what's going on in some of these tiny cap companies, you don't. Like, these things are terrible. Like, you don't know what's happening with these. You don't know what the CEO is doing. A lot of the times the CEO understands that like, this isn't going to be a blue chip company ever, and so he's just trying to find a way to make as much money as he can as fast as he can a lot of the time for these big CEOs, and there are these small cap CEOs. Coinbase at 58s. Still got time. Hey, AMC was going to hit 1 million. HMNY, what is that, Movie Pass? Is that right? Dude, I've been trading for a long time. Is that Movie Pass? I can't remember. I feel like it is, though. Movie Pass was, I don't know how they were ever expecting to make money. Was it that Movie Pass, HMNY? Again, I've traded a lot of stocks, so I kind of can remember these because this was like 3 or 4 years ago. Correct me if I'm wrong. Isn't that Movie Pass? Yeah. Okay, yeah, I remember HMNY. Again, I remember a lot of these, bro. I see a lot of them. The really old school people remember Dry Ships, DRYS. Crazy short squeeze, man. The first introduction to the stock market I started trading in 2016 on a terrible platform called SureTrader. And I used to trade a lot of these crazy short squeezes and pumps, really what they were. My first introduction to the stock market and like volatile day trading was I watched a company called Dry Ships, DRYS, go from like $2 all the way to like $103 and then back down to $2 in like 16 hours or whatever it was. I can't remember how long it was, but that was my first introduction. Just pure manipulation, almost certainly from the insiders in the company. But yeah. Again, a lot of us are waiting for the earnings call to start, team. CI to $1 tomorrow. We'll see. CER to $1 tomorrow. PayPal at 72. Yeah, we can look at PayPal. Again, I don't trust PayPal long term because of cryptocurrency obsolescence. But I also understand the use of PayPal, and I still use PayPal pretty regularly in my everyday life. It's just like when I bet on a company, when I swing trade and invest in a company, I want a sure thing, and I just don't consider PayPal a sure thing because I think there's too many vulnerabilities for it to really be confident long term in something like that. Yeah, it was something crazy. Hurts. I kind of like these smaller streams because I can just kind of hang out with you all. Like the big crazy streams are kind of stressful. You got so many people in chat, so many different viewpoints, just kind of yelling at each other. They're kind of stressful. Yesterday, the FOMC meeting, we had like thousands and thousands of people, and it was just kind of hectic. We do have some stuff dropping tomorrow, though. So tomorrow, team, tomorrow's the 4th. All right, guys. So yeah, tomorrow we've got European PPI dropping at 6. European PPI dropping at 6. That'll be interesting. Producer price index for Europe dropping at 6. We've got at 8:30 Eastern Standard Time, we got non-farm payrolls, participation rates, government payrolls, manufacturing payrolls, and the unemployment rate, all dropping at 8:30 tomorrow. And so that'll be big. Coinbase call is in about 40 minutes. 5:30 Eastern Standard Time. We're gonna stream the full thing live here. You'll be able to watch all of it. We also have the Canadian unemployment rate, participation rate, part-time employment change, and all that stuff. But in the U.S., we've got government payrolls, manufacturing payrolls, non-farm payrolls, participation rates. We've got unemployment rate for October. Yeah. Wait, did the Coinbase? Oh, I was gonna say, man. Yeah, I'm definitely not over here playing poker in one of my other monitors that y'all can't see. I'm definitely not doing that right now. That's definitely not what I'm doing. Coinbase up to $58. Again, we drew the support and resistance line at $58. We'll see if we hold. Yeah, Elvis, it'll be important, bro. It'll move markets some. Specifically the unemployment rate. The unemployment rate, non-farm payrolls. Again, we're in this weird market. Expectations for non-farm are for 200K. We're in this weird market where less is more and more is less, right? So higher than expected non-farm payrolls will actually be worse for markets, right? That means more people working, more payroll numbers. It'll probably cause the market to drop. if we get higher than expected. Lower than expected will be interpreted as positive and will probably make the market go up. We're in kind of backwards lane with markets right now. Unemployment rate, the same thing. A lower unemployment rate will make the market fall, and a higher unemployment rate will probably make the market go up. When do we bounce back? I don't know. I bought Google. I bought some Google. I'm break even right now. Bought about 200 shares of Google, give or take. Spent about 17,000 on a little swing trade here for Google. We'll see what happens. I just think it's so objectively cheap right now for Google that I can buy it right here, and we'll probably get a short-term bounce back tomorrow or the next day. If we don't, then I can still either average into it some more and just sit on it for a longer period of time, and turn it into an investment, which is kind of what I like doing. It works really well. Or I think it's actually more likely, though, for this to actually turn in my direction, considering how extended a lot of tech stocks are right now. So let me know what you guys think. Yeah, and in exactly a week from now, guys, we're going to have craziness in markets, right? The biggest stream we ever do here in this channel. Last time we had like 4,000 or 5,000 people here live. The biggest stream we ever do here is the CPI stream. And that is next Thursday. So exactly a week from now at 8:30. We're going to get that drop. It's going to be fun to see what happens, But that is, again, in exactly a week from now at 8:30 Eastern Standard Time. PayPal actually rebounding a little bit here. Bad guidance for PayPal. Slight beat on numbers. Bad guidance. Drops initially, rebounding. Coinbase kind of the opposite. Bad EPS. Bad numbers for Coinbase. A rip originally, and now a pullback. So, hey, all good, Aki. Hey, and y'all hit that subscribe button if you haven't already. Yeah, I'm mostly a sit and go player, Jeremy. And so I like 6 and 9 max sit and goes. Yeah. But again, maybe I'm wrong. Yeah, hey, thank you guys. I might be wrong. Maybe we drop. Yeah, Coinbase net loss of $545 million in the Q3 of 2022. But again, we're starting to get some rebounds here. Warner Bros. Says it has moved up the U.S. launch of its combined streaming service to spring of 23. So Warner Brothers is going to drop its own streaming service in 23 in spring. Bro, the inverse Kramer page is one of the funniest pages ever, dude. Jim Kramer says, "Go Phillies." Houston throws a no-hitter. Please go for the Phillies again, Kramer. Please, bro. Thank you so much. John Boy looked disheartened after that Phillies game, man. You love to see it. I'm in Houston right now. You love to see it. Honestly, we're just a better team than the Phillies. Just objectively better here, okay? Listen, Verlander just chokes in the playoffs. Apparently so does McCullers. But our other pitchers are clutch, man. Throw Fromber out there. We need Fromber Valdez out there is who we need. Okay? Do not let Verlander pitch. All right, we're at 72s right now for PayPal. 72s. Who are they playing tonight? Who's pitching tonight for the Astros anyway? Hey, thank you, Ricky. I appreciate it, man. Hey, later, Jeremy. Have a good day. Honest question here. Do you think Amazon will go back to being $1 trillion company within a month or so? I'm not going to say I know how long it's going to take. I will say that Amazon is a money-making machine. And so, in that regard, they're going to be fine long term. They own everything. I mean, it's not that they even own everything, but like, take your average person in the world right now. Do they use Amazon? Chances are probably pretty high, at least, especially if you're in the US. Yes, they do. You know, and so Amazon is at a huge discount right now relative to where it could be. And I don't know how long or how, where it's going to bounce back or when it's going to bounce back, but it's going to bounce back, in my personal subjective opinion. Maybe I'm wrong. Maybe it crashes down, but I don't think I'm wrong. Don't sue me if I'm wrong. Talking about the Phillies, bro, we're an objectively better team here, okay? Listen. If we didn't have Verlander and Verlander did great during the year. Verlander obviously chokes during the playoffs. How's Bitcoin reacting here? PayPal bouncing back here, guys. We got about 30 minutes. Hey, what's up, Tiny? Hey, good evening. Hope you're doing good. It's kind of crazy. We're almost up to 91,000 subscribers again, man. That's cool. My problem is I hate the companies that put the earnings call so far away from the earnings release. Why, dude? Why are y'all scheduling it like this, bro? Why don't y'all just freaking play the Coinbase earnings call at 5 o'clock like a normal freaking person? Like, why do you play the earnings call 2 hours, literally an hour and a half after the actual earnings release? Still got 30 minutes before the actual earnings call drops. And everybody do me a favor here. Listen, you can win a PlayStation 5 or Xbox Series X. And honestly, there's not that many people involved in it here. It's going to go until the end of November. For November, we're going to pick a random person that follows, retweets, and then replies with their favorite stock market meme to this tweet on my Twitter. We'll send you a PlayStation 5, Xbox Series X, or the equivalent amount of gift card or whatever we can. There's the do it. And there's not that many people involved in it, guys. So, listen, I'm not saying you should go follow me on Twitter, but it might be a good idea. Coinbase still consolidating over 57. We got 30 minutes, team. Shorts on Boeing. Got me. Didn't Dries go to like 1K? I don't know. Dries didn't go to 1K. Dries went to like $100, and then split a bunch. I started to hear that, Anthony. Hey, what's going on? Which one? The Willy Wonka one? Oh, Don't Sue Me? We could add it real quick. Let me see if YouTube allows me to add it. I can try to add it real quick. They actually let me add the last one pretty quick. So hold on, let me try this real quick. All right, let me see. They might let me add one. Let me see. Let me find the "Don't Sue Me" image. Pawn. Let me see where it's at. You can send me the "Don't Sue Me" image. I gotta keep scrolling up to find it. But if you could send me that, I'll add it real quick. Thank you, sir. All right, let's try to add this to YouTube. All right, yeah, they actually allowed me to add it. All right, let me refresh this real quick. There you go. All right, guys. PayPal bouncing up a little bit again. We still got about 25 minutes before the actual earnings call for Coinbase starts. I hate to say it. I don't know if I'm going to cover the next Coinbase earnings call. I mean, I'm here now, so I feel like an obligation to do it. But, like, it's kind of slow. And we still got 250 people here, so it's not bad. But yeah, there's the "Don't Sue Me" earnings. Yeah, doing the only one I worry about that is copyright implications there. Phillies will win tonight. Never, Daniel, brother. I mean, listen, it depends on who we have pitching. Who's pitching for the Astros? Do not let it be Justin Verlander. I think it is, dude. All right, today's game 5. Who's the pitcher? Please do not let it be Verlander. Ugh, dude, Astros. Verlander's pitching tonight. We're gonna lose. Like, remember me saying this. We're gonna Verlander needs to get out of here, bro. Listen, I like Verlander. He helped us get to the World Series, and that's great. But he is not clutch at all in these World Series, man. He gave up 6 runs. Like, we got one of the best bullpens. I'm really nervous about Verlander. Do you think Roku with bad numbers bounced back to break even? Basically was down 25%, recovered all those losses. I don't believe in Roku as a company. I'll tell you why. I don't believe in Roku as a company, mostly because it's replaceable technology. And so while it might be unique and different, I think that these TV companies can just include the software in their TV themselves. after a certain point without needing to pay Roku for licensing or whatever it is, and without needing to even promote another company. They can do it themselves, and they do it themselves at this point in time. A lot of the stuff that you get with Roku is already included in the newest Sony smart TVs, the newest Samsung smart TVs. And so in that regard, it's replaceable and vulnerable to competition. And, again, there's a story I always tell about Roku that's relevant here, and I think it's important for people to understand, which is that specifically it's replaceable. Okay, here's a story. Back in the 90s, when the internet first became a thing, the biggest browser on the block was a company called Netscape. All right, now Netscape sold their browser software, in discs, or drives. I can't remember what it was back then in 95. But they sold their browser software. Before we had Chrome or anything like that, there was a company called Netscape. And Netscape was the hottest browser company on the block. They were one of the first companies to IPO before they were actually technically profitable yet. And they had a wildly successful IPO. It really set the foundation for a lot of these tech companies to IPO before they're actually profitable, because that's what Netscape did in the 90s. And again, it was wildly successful in its IPO. What ultimately happened, though, is that Microsoft eventually came up to Netscape and they were like, yo, look, why don't we partner together? And Netscape was like, no, we don't want to. I don't want to partner with Microsoft. And so thus it sparked a competition between Netscape and Microsoft. What Microsoft eventually did was they started including their own version of a browser, included free with the hardware of the PCs that were selling with Microsoft in them, right? So they started including free versions of the same exact type of thing that Netscape was for free, included in the computers. Within a year or two, Netscape lost almost all of its value and was sold for only a couple million to American Online. And again, I think that mirrors the problem with Roku here, which is that when it was new and interesting, it can do well, but over time, these TV brands are just going to do it themselves, and thus is the problem with Roku. It's one of the reasons I don't believe in Roku, and I've been saying this for a year now plus. And Roku, if you look at it where it was a year ago, where it's at now, I think there's risks. All right, guys, about 20 minutes here. 20 minutes. All right, guys. Coinbase is following the 21 October chart. It's exactly the same. It'll rally after midterm as an entire market bounce till end of the month or early December. I don't think it's that easy to predict, to be honest. I mean, I know a lot of people use crypto cycles, but we'll see, Again, if you want to help support your boy here, check out TopStep. TopStep is a sponsor of mine. They are a funded account program in futures. They give you a demo. If you can hit their target on their demo while following their rules and conditions, they fund you between $50,000 up to $150,000 in funding with a 90% split. If you look at me, we're trying to get funded right now on their 150K combine. And we're doing pretty well, kind of slowly growing here. TopStep is the most legitimate funded account program in the world. They pay out millions, fund thousands of traders a year. And if you look at TopStep, you can see the PDT rule restricts a lot of traders here. If you look at the E-mini on the left, and then you look at the SPY or the S&P 500 on the right, you'll notice it's the same exact price action here and here, right? But you can trade this left side with no PDT restrictions, instant settlement, shorting ability in the futures market. And Top Step lets you do that as a funded account program in futures. They're the most legitimate funded account program in the world. You can see they paid out $3.3 million in 2021, funded thousands of traders in 143 countries. And again, if you want to check them out, you can get 20% off. A great way to help support the channel is by checking out Top Step. They are a sponsor of our video, and so we're certainly biased in their favor. But yeah, can help a lot of traders get around the PDT rule. There's the link. Check it out. Philly wins tonight. I mean, if Verlander's pitching, to be completely real, I don't know if I have that much confidence in him. Again, with Verlander on the mound, I'm just not confident in him. Again, he seems to choke during big moments, specifically the World Series. He's one of the reasons we lost the last World Series. So PayPal beat on earnings here. If we look at PayPal on the right, PayPal at 71.80s here. All right, we're almost up to 72 for PayPal. All right, we're at 72s right now for PayPal. Coinbase at 58s here. Again, guys, we got 15 minutes. I'm definitely not looking at scammer messages on my computer. Hey, baby. Okay.
Yeah, I need more lights.
What?
Get enough of those little battery-powered lights for the garland.
Is Netscape better than AOL? Netscape was pre-AOL, bro. So like Netscape was big and then AOL got big. they were kind of the same age. AOL eventually bought Netscape. I think it was for like 2 million, 2 or 4 million. So much worse. It was at one point worth almost $1 billion. But then Microsoft came out with Internet Explorer, and they started including Internet Explorer with the computers themselves, and that basically destroyed Netscape overnight. They were just no longer viable after that because the real future of browsers were free, and they were still trying to pay for them. Or they were trying to still get people to pay for them. Basically, is what happened, right? That's essentially what destroyed Netscape. And again, I think that's kind of what's happening with Roku. I think eventually these companies are just going to include them with the TVs. They're going to pay a software developer $100,000 to build their own version of Roku, and Roku's not going to be useful anymore. All right, guys, 13 minutes. Bro, I'm kind of reading like some of AMC's Twitter pages for like some of the AMC ape community, and some of them are just freaking ridiculous. Like, yo, I'm into crystals and spirituality, holding AMC ape and HYMC. It's like, bro, what are y'all talking about, man? Like, y'all are like, those are y'all's picks. I bet y'all are into crystals, There's a crystal meth joke there somewhere. I'm just not going to use it. Okay. We got another guy saying, should I buy AMC or ape? Neither one of them, bro. Neither one of them. AMC, actually, there might be an argument for AMC where we're at currently, just because it's so freaking cheap relative to where it could be with the entire ridiculous following that it has. There might be an argument there, but I don't know. The only honest people were like, neither. This thing's actually funny. Look at this. That's the funniest meme I've ever seen. Oh, man. All right. 10 minutes, guys. 10 minutes. I'm going to stop clowning on AMC traders now. The actual earnings calls in 10 minutes. Y'all can hear the music, right? Let me know if you can. Your 2 cents on BYND, Beyond Meat. I don't believe in Beyond Meat either. The problem with Beyond Meat is that they overestimated their market. So, like, they're too expensive. The deals that companies like Beyond Meat, like Impossible, have done with, like, Burger King were just terrible ideas. And I think that they overestimated the market. I think that vegans are incredibly health-conscious people. And, like, I know Impossible did their deal with Burger King. But vegans aren't going to Burger King, bro. It's like selling caviar at, that's like selling caviar at Long John Silver's. It's just not going to work. And so in that regard, selling a fake meat substitute for the prices they are for Beyond Meat, I think they're overestimating their interest. And so sure enough, if we look at Beyond Meat, it's gone from basically 250s, 200s down to $14 a share in the last couple years. Last year, It's gone from 40s down to 14. So never really been a believer in Beyond Meat. And in hindsight, I was correct about it. So Elon Musk and advisors have discussed adding paid direct messages and fees to watch videos and other features to Twitter. Nobody's going to use it if you do that, Elon. That's going to destroy your market. Again, here's the problem. In social media, you have options. If you make everything required to pay for it, if you put a paywall behind things, people are just going to go to other social media platforms. That's what he's not understanding, you know. Same thing with the blue check mark. I mean, I'm not saying we want it higher than expected, but I think the market will react positively if it's higher. I bought Google today. We're pretty much break even here on Google. We got a couple hundred shares. We'll see what that one turns out and looks like. I mean, that's most of the earnings have already dropped today. Again, we're just kind of waiting for the earnings call for Coinbase to start in 8 minutes, and I'll just throw it up on screen and let you guys watch it. I think earnings call dumps Coinbase. We'll see. Possible. I mean, it's possible. Hey, what's up, Face the Giant? Yeah, I'm not a big... I mean, you can make money shorting some of these companies for sure. But I think there's too much risk in that. You know, I'm not really a big shorter long-term. I would rather ride the trend of long-term blue chips on the upside. I think the easiest money to make is diversifying into healthy blue chip companies and sitting on them. I think that's the easiest money to make. Warren Buffett's value investing, easiest money to make in the market. You diversify, you research healthy companies, you diversify, you sit 5, 10, 15 years. You're almost guaranteed to make money doing so. And with compound interest, you know, it's the easiest way to make money in the market for sure. Yeah, I mean, that might be true. Get it by any means. Again, I've never been a big believer in Roku. I just thought there were risks long term in it. And again, in hindsight, I was actually correct. Beyond Meat exec Doverant. Yeah, I mean, again, I think he overestimated his interest here for it. Earnings call in 6 minutes, guys. 6 minutes. All right, we're in the earnings call wait room right now. Coinbase up a little bit. If we look at it over the last year, that's the yearly chart on Coinbase. I'm going to put Bitcoin chart up here so we can watch Bitcoin, what it does. And we got about 5 minutes left, 5 minutes. I agree, but shorting a stock long-term with a weak business model can be a hedge against your long plays as well as still make money. Yeah, for sure. I mean, of course you can. It's all preference-based. It's subjective. Personally, myself, I'm just not a big short trader long-term. I just don't think it's easy to make money that way. I've been right about a lot of stuff. If in hindsight, if we look at the stocks that have been incredibly bearish on, I can list them. Okay, Beyond Meat was one of them. Peloton was one of them. There's a few other ones that have been very bearish on. Chat might be able to help me out. Meta, not really Meta. But BYND and Peloton were some of the ones that was the most bearish on. Lulu, I was bearish on Lulu long term as well. But Lulu is doing okay relative to a lot of different things. But yeah, regardless of any of that, though, I understand short positions. You can get margin called. You can get. There's just risks holding short positions long term, and so for me, I'd rather just ride the trend, go long. But everybody's different. All right, guys, 4 minutes. What do you guys think about the blue check mark thing on Twitter? Again, I got to disagree with the blue check mark. And the reason I disagree with charging people for it is because if you let anybody buy the blue check mark, it's going to make it worthless. You know what I mean? So, like, if anybody can buy the blue, I think he misunderstands why people want the blue check mark. People want the blue check mark because it's a status symbol on Twitter. It sets them apart from everybody else, right? You can look at it and say, oh, they got a blue check mark. Like, when I break 100K on YouTube, I'll have a blue check mark. I want that blue check mark, not because I pay for it, but because it sets me apart from other channels. In that regard, if you let anybody buy a blue check mark on Twitter for $8, it's not going to mean anything. The blue check mark will be worthless, And so that's what I don't understand about that. I disagree with Elon. I don't think that's a smart move. I think that's dumb. I think you're going to dilute the check mark on Twitter. It's not power to the people. Yeah, let everybody have a blue check mark. It's like, okay, well, then it's worthless. It might bring you some initial money, but what it's going to do, it's going to make people that are actual public figures on there not want to be on there. I think there's other ways to monetize Twitter outside of that. Where's Disney at right now? Disney is currently sitting at $99 here. It's still not cheap enough for me to want to buy it yet. Again, last Disney trade, we bought it at 91s. Did Robinhood drop earnings too? Did I miss Robinhood's earnings report? Robinhood did good today, surprisingly enough. Was Robinhood this morning? Yeah, Robinhood was yesterday. Robinhood dropped 20-cent loss, beat the 31-cent loss estimate. Sales of 361, beat 355 for Robinhood. Interesting. All right, guys, we got about a minute left. Let's watch this. Minute left. All right. How long you plan to hold Google for? As long as I need to, I guess. I think it's objectively cheap right now, so however long it takes to rebound. Now, if we start dropping under like 50, I'll get out, but I don't think that's going to happen. I don't know what job numbers are going to be like tomorrow. I'm just going to wait for the reaction. Yeah, but the blue check mark thing, if everybody has one, it won't, like, nobody's going to care about it anymore, You know what I mean? Like, if everybody's got a blue check mark, it's not going to set yourself apart. It's just going to be normal. It's just going to, instead of nobody having blue check mark, everybody's going to have one and nobody's going to be different, which is the whole point of it, is to say, hey, this is a public figure. Yeah, I mean, we're just covering Coinbase for earnings. We cover all the major earnings releases. We covered AMD a few days ago. We're covering Coinbase today. We covered Disney, Apple, Amazon, Tesla, Netflix. We cover all the major ones. All right, guys, here's the earnings call. I'm going to mute this. Y'all can hear the music, correct? Waiting for it to start right now. Prior to just now, you could hear the music, correct? We're just waiting for the earnings call to start. We're going to turn the music off.
My name is Abby, and I will be your
Sound
conference
check.
operator
Sound
today.
check.
At this time, I would like to welcome everyone to the Coinbase third quarter 2022 earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, again, press star 1 on your telephone keypad. Thank you. Anil Gupta, Vice President, Investor Relations, you may begin your conference.
Good afternoon and welcome to the Coinbase third quarter 2022 earnings call. Joining me on today's call are Brian Armstrong, co-founder and CEO, Emily Choi, President and COO, and Alicia Haas, CFO. I hope you've all had the opportunity to read our shareholder letter, which was published on our investor relations website earlier today. Before we get started, I'd like to remind you that during today's call, we may make forward-looking statements. Actual results may vary materially from today's statements. Information concerning risks, uncertainties, and other factors that could cause these results to differ is included in our SEC filings. Our discussion today will also include references to certain non-GAAP financial measures. Reconciliations to the most directly comparable GAAP financial measure are provided in our shareholder letter on our IR website. Non-GAAP financial measures should be considered in addition to, not as a substitute for, GAAP measures. We are once again using Say Technologies to enable our shareholders to post questions, and in addition, we'll take some questions from our research analysts. With that, I'll turn it over to Brian and Alicia for opening comments.
Thanks, Anil. All right, so as I look back at the quarter, obviously there were some macro headwinds, just with the macro environment being down, and that ties directly into our trading revenue. But I was really excited to see the growth in our subscription and services revenue. This is something where, 3+ years ago, we started planting the seeds of building some of these different product lines with different revenue streams. And we've really started to see that come to fruition, which means the portfolio of products that Coinbase has and works on has started to provide less volatility for the parent company revenue overall. We still have a long ways to go on that, but it's a great trend and it's moving in the right direction. So I just wanted to touch on a few topics. One is I want to touch on our move to a product group structure in the company that I think will help us move even faster. And then I'm going to touch on the regulatory environment, and I'll end by sharing a few thoughts about how we're going to continue to lead in this environment. All right, so you may have read the news that our Chief Product Officer is going to be leaving the company. And, this kind of accelerated a change that we had been thinking about for a little while, which was the idea of elevating our product group leaders in the org. And so we decided to make that change, and they're now going to be reporting directly to me. They'll be on the executive team. And we really have 3 different customer segments that Coinbase serves. And so the product groups cleanly break down across those 3 customer segments. We've got consumers, institutions, and developers. Now we're going to have a 4th product group, which we're calling platform, and this product group is there to build the shared components across the different product groups that all of our products use. For instance, connecting into the different blockchains out there, generating transactions, storing crypto, things like that. So I'm really excited about this change for a few reasons. I think that we're a big enough company now where we want to have more autonomy and P&L ownership for each of the different product group leaders. We want to give them the ability to move quickly and nimbly, pushing down decision-making in the org, having them operate a little bit like 3 different startups within our larger company. And I'm really excited to see what the leaders of each of those product groups can do. And we have some really incredible talent, some rising stars in the company. And we're giving them more ownership here, which I think will drive our efficiency at scale, which is by the way, I put out a blog post, earlier this year, how we're going to operate efficiently at scale. It's probably good to go back and look at that too. So let me just touch on the regulatory environment as well, because of course, the regulatory environment, I think, is one of the biggest unlocks that we're going to have in terms of growing this industry and perhaps even getting the prices to go back up in the right direction. By the way, there's an opportunity at some point for the crypto prices to potentially decouple, I think, from the broader macro environment. And We don't know if that'll happen, but I think it's one of the possibilities. And regulatory clarity is one of the things that could help kick that off. So just generally, if I look at the whole world, because of course we're engaging with policymakers all over the world, the G20, with the exception of China, has actually been generally positive, moving towards regulatory clarity, whether it's in Europe or in Hong Kong or in Australia or Brazil. We're seeing regulatory clarity emerge around the globe, and that's really exciting and positive. The U.S., I would say, is a little bit behind, but it's also moving in a positive direction. There's a bill going through Congress called the Stabenow-Boozman bill, or simultaneously it's being referred to as the DCCPA, the Digital Currency Consumer Protection Act. And this is a really positive development overall. It gives spot market authority to the CFTC. It helps clarify the regulatory environment for centralized exchanges and custodians, which of course is a primary thing that we do. And it clarifies some of the regulation around stablecoins, which is also good. Now, there's also part of the language in the bill that we're going back and forth with policymakers, helping provide input and draft some of this, is around DeFi. And look, I think that DeFi and self-custodial wallets are a super important part of where crypto is going. When you hear about Web3 and decentralized apps or dApps, and DeFi itself, these are really essential to have the ability for new companies and participants to go build these protocols and really give access to these tools to people all over the world, including the 1.7 billion people in the world who don't have access to any bank account or financial services today. So we'd like to see DeFi preserved and the innovation potential of that preserved. I really think in this Stabenow-Boozman bill, everybody can basically agree that centralized exchanges and custodians should be regulated. And my ideal world, I think we would really just focus the bill on that plus stablecoins and just take the win. There's a lot of good work to do for the industry and regulation. We can come back to DeFi later. But if DeFi needs to be included in somehow, maybe there's a way to sort of, create further study and not necessarily opine on something so early in that bill. So anyway, we're very excited to see that bill make its way through Congress. It has bipartisan support. I think it would be a great change actually to the current environment in the U.S. where, unfortunately, we're seeing this kind of regulation by enforcement from the SEC, and I do think that's creating a chilling effect on the U.S. market. It's harming U.S. investors in the sense that it's encouraging them to go to offshore exchanges that are less regulated or not regulated. And we'd like to see that change in the U.S. and for there to be regulatory clarity so that the U.S. can continue to be a leader in this space. As we're working on all these policy efforts, we're also not just sitting back idly. We're going to continue to build and innovate across all of our product suites, and it's going to continue to make us think about how we're making investments internationally. Because of course, our mission is to increase economic freedom for the world, and there's various jurisdictions around the world that are a little further ahead on the regulatory clarity, or they're even trying to attract crypto businesses there, building something where people can serve the rest of the world. And so we have to think about all of that at the same time as we help these policy efforts come to fruition in countries around the world. So yeah, just in this down environment, the down market, I should say, I'm actually really excited and energized. We've been through 4 crypto cycles in the last 10 years at Coinbase. And, it's kind of funny. I actually enjoy the down cycles a little bit more. In up cycles, there's tons of scaling effort that has to happen. And a lot of people rush into crypto for sometimes the wrong reasons. In the down markets, you get to focus on building, and everyone's there who's a true believer and a true builder. And that's no different in this case. There's a ton of innovation happening. There's still a ton of institutions signing up, kind of getting ready to take advantage when this market, we find the bottom of the macro environment. And Coinbase is going to continue to lead in this environment, doing what we've always done in the sense that, we're taking a very trusted and compliant approach globally. We're not trying to cut any corners or move too fast. We're trying to do the right thing for the long term, even if it's more difficult in the short term. I think that'll pay off for us. We're also leaning into all the variety of different use cases that are emerging in the crypto economy. We're leaning into Web3 usage, building a lot of this functionality natively into our app. Trading is great. And it's been a big source of revenue for us. It'll continue to be in the future. But we also want to support all of the use cases in crypto, not just trading, so that the crypto economy can really come to fruition. And that'll be a diversity of different revenue streams that come into our platform. We're trying to make crypto easier to use, and that's how we're going to get 1 billion people and eventually half the world onto using crypto and benefiting from it. So I think Coinbase has been a leader in terms of ease of use and design. And of course, we're one of the companies that has a portfolio of different products. And so this is great. Our customers love it. They can just sign up once, but anything they want to do with crypto, it's easy. They already have their crypto stored with us. It's just one more click to, buy an NFT or stake and earn yield on their crypto. And so the portfolio of products that we've created, I think, is unmatched in the industry, and we'll continue to build that out. So with that, let me turn it over to Alicia, who's going to go through our Q3 numbers.
Thanks, Brian. I'm just going to quickly recap a few key financial highlights from the quarter. Our results were covered in great detail and at length in our shareholder letter. So while our net revenue did decline sequentially to $576 million, our net loss and adjusted EBITDA both improved sequentially to negative $545 million and negative $116 million, respectively. And we think this really speaks to the cost management efforts that we took in Q3. Our trading volume declined 44% sequentially, driven by ongoing headwinds that we discussed in our letter. Our MTUs declined 6% to 8.5 million, as user behaviors continue to shift from trading to non-trading transactions, and our users are increasingly engaging in staking and reward-generating products amid this massive reduction in prices and lower crypto asset price volatility. We are so pleased, and Brian alluded to this earlier, that our subscription services revenue grew 43% sequentially to $211 million. And importantly, if we hold price constant, so if Q3 prices were the same price they were in Q2, that would have grown 82%. The biggest contributor within this line item is interest income, which is benefiting from the rising interest rate environment. We took very decisive action on cost, and we were able to reduce our operating expenses by 38% sequentially, or 22% when you back out the impact of non-cash impairment charges on our crypto assets. We are actively updating and evaluating our scenario plans and prepared to reduce operating expenses further if market conditions worsen. We ended the quarter with $5.6 billion in total US dollar resources. In addition, we held a portfolio of $483 million in crypto assets, and combined, we believe this puts us in a strong position to manage through these market headwinds we face. So just in closing, I want to touch on our outlook. For 2022, for full year 2022, we remain cautiously optimistic that we will be able to operate within the $500 million adjusted EBITDA loss guardrail that we previously communicated. This is assuming that market cap doesn't go down and deteriorate meaningfully below October, and that we don't see any changes in the customer behaviors. As we approach 2023 planning, we're currently preparing with a conservative bias and assuming the current macroeconomic headwinds will persist and potentially intensify. We are not providing a quantitative outlook at this time. So to conclude, we feel confident that we're in a good position to manage through the stressed market and will emerge stronger on the other side. So with that, let's go to questions, Anil.
Great, thank you both. Before we get into Q&A, I'll quickly reiterate our call principles. So first, we'll answer the most upvoted questions determined by the number of shares, and we might group questions together that touch on the same themes. Second, we don't plan to answer questions related to the potential listing of new assets. And third, we'll avoid questions we've answered in the past or issued blog posts about in the past if there are no material updates. So with that, first question's from Manuel O, who asked, what's the prediction for the next 5 years? Brian?
Yeah, thanks, Anil. So, of course, just to clarify, we always have to say we can't actually predict the future. I don't want to make the lawyers too nervous here on forward-looking statements. But, I kind of like this quote, the best way to predict the future is to invent it. So we can certainly do our best to build some of the things that we think have potential. And it's a great way that people can have an impact on the world. So, what's going to be different in crypto in 5 years? Well, look, as I addressed earlier, I think there's going to be more clear regulatory environments across the G20 and really around the world. That's going to unlock a lot more institutional capital. We're seeing that under the surface, even in this challenging market, we're seeing the adoption from insto investors that are basically signing up to our Coinbase Prime platform. And I like the language that we used in the shareholder letter around the spring is coiling. I think there's a lot of people preparing for when the next upswing could happen. I think the scalability of the blockchain will continue to improve. We saw this a little bit with Ethereum's merge this year, but they have a lot more updates there. We're seeing other blockchains continue to scale with Lightning Network and various layer 2 solutions, which is really exciting. That'll just unlock a whole bunch of new use cases. And this similar to how the internet moved from dial-up to broadband. I think decentralized trading with DEXs, decentralized exchanges, will continue to grow as a percentage of all global trading, and we're excited about that. I think you'll see actually more countries in the world adopt cryptocurrency as legal tender, kind of in the way that El Salvador did with Bitcoin. I know that they were a very early adopter, and there's probably going to be, in the next 5 years, I would be surprised if we didn't see other countries continue to adopt, cryptocurrency as their legal tenders, similar to how some countries actually just peg their currency to the U.S. dollar. I think a lot of countries are also going to pursue central bank digital currencies, and in the U.S., I think actually USD coin will end up being kind of the de facto central bank digital currency in the U.S. In other words, the policymakers in the U.S. will set the frameworks that need to be followed, but the private market will actually create the solutions. And USD coin has been on a really rapid rise, and I think it'll probably be the largest in the world at that point, ahead of Tether, if I had to guess. I think crypto will just start to have a really big impact on economic freedom. That's kind of what we believe is going to happen. That's the mission of Coinbase, and the market will recognize us for the long-term thoughtful approach that we've made around compliance, trust, security, ease of use, and hopefully, we have at that time 1 billion people using crypto. Today, I think there's probably 200-300 million people in the world who've used crypto, and I think we could easily be at 1 billion people using crypto within 5 years. But again, we can't tell for sure, and this is going to take a lot of hard work.
Great. Our next question comes from Cordaro S, who asks, how does Coinbase plan on surviving the current economic downturn? Brian?
Yeah, well, just one kind of language nit I'll mention there. I don't like the word just surviving in the current economic downturn. I think there's actually opportunities to thrive in this environment. And whether the market is up, there's opportunities. Obviously, we could raise money at higher valuations or whatever. But in down markets, there's also opportunities all around us. There's opportunities to do good M&A deals, and we're looking at a lot of those. We've got dry powder to take advantage of that when prices come down. And there's opportunities to build, right? If we don't have to focus so much on just scaling in a hyper-growth environment, there's opportunities to help build the future, pay down tech debt. We're seeing a lot of improvements across our technical infrastructure, just around tech debt that will help us get to the next order of magnitude in the next run up. So there's lots of opportunities to thrive. Of course, subscription and services is another big one that I mentioned, right? We planted those seeds to diversify our revenue streams. That's really coming to fruition. And we don't know exactly what will take off in the next cycle. So we've got to continue building and innovating. That's part of why I'm so excited about how we're making Web3 easier to use. There's, I think, a lot of exciting work happening with decentralized social media, DAOs, decentralized gaming, all these things we need to make, the metaverse, right? People want to own digitally native items inside the metaverse in various games. So we need to make sure all these things get easier and easier to use over time. And we've got opportunities with our products there as well, not just around trading, but all these other use cases. Let's see what else. We're continuing to do great partnerships. BlackRock and Meta and Google. As a public company, I think we've been really delighted to see that other public companies are willing and excited to work with us, and our diligence processes with them has gone even better. And just overall, I think we're going to manage through this the way we've done through the last 4 crypto cycles that we've been through as a company. So obviously, we have to be rigorous about managing costs and things like that, but there's good revenue growth opportunities in these different areas. And we're going to keep operating efficiently and making some of these changes like around our product groups.
Brian, if I could, I'd just like to add on a couple numbers behind your comments. So just to add on to this question, we did end Q3 with $5.6 billion in total USD resources and $418 million in crypto, so over $6 billion in combined crypto and cash resources. On our operating expense side, as I mentioned earlier, we reduced our operating expenses by 22%, excluding impairments. And we're continuing to manage expenses very closely given the macro conditions. And just a final thought for me, I think it's important to share how our team thinks about operating through these volatile crypto markets. And as a team, we spend a lot of time thinking through a variety of scenarios and developing contingency plans. We believe we have the balance sheet to weather a multi-year downturn, and we have action plans we would develop to lower our expenses or extend our runway if needed.
We had several questions about competition. I'll summarize them by saying, how do you plan to compete with companies that offer zero-fee trades or other companies that are starting to get into the U.S. market? Emily?
Thanks for the question. So we are seeing a lot of headlines about zero fees, and I want to make sure we unpack that a little bit. So there's two ways that companies generally generate revenue through trading. There is spread and there is a fee. And companies that say zero fee are still generating a spread or charging a partner. So right now, we are roughly in line with other companies in terms of our total cost. In any case, customers are willing to pay for our premium product, and we've talked before about we are not going to compete on price because of the quality of the product. We also offer Coinbase One, a subscription product where customers can do zero fee trades. So then now let me move on to how we compete. At the highest level, our goal is to grow the share of users and wallet across our three customer segments: consumer, institutional, and developer. We have three major differentiators or value props. One is that we are the most trusted. We've always taken a long-term view on compliance and security, and we're widely viewed as the safest and most compliant player in the space. Ease of use. We know that crypto is too complex for the average person, and with Coinbase, people can get the utility of crypto technology without having to understand all of the technical details. Finally, we have an integrated product suite. We know that there will be many winners in crypto, and there's going to be plenty of opportunities for everyone to extract great TAM. But Coinbase is one of the only places where you can have one crypto account and do every sort of crypto activity. You can trade, stake, pay, borrow, earn, create, etc. And we believe that we have begun to prove out this multi-product strategy. So examples of this, one is that we started to invest in USDC back in 2018. We invested in staking in 2019. And now we're seeing that these efforts are yielding pretty great results, as demonstrated by the growth of our subscription and services revenue. And we continue to plant seeds for future growth through partnerships like the ones we've announced with BlackRock, Google, and others. And then finally, as we look towards big opportunities and big TAM expansion, we should note that our product suite has historically been focused around crypto spot markets, specifically US spot markets. And that is a great opportunity, but that's also a smaller TAM compared with the global crypto trading market. So as we look at product and geographic expansion opportunities to grow revenue in a larger TAM market, that includes things like derivatives in the US and globally, we think there's a lot of ways to expand that TAM. So in summary, lots of TAM expanding moves. We believe that being the most trusted, easiest to use, and having an integrated product suite over time across these three different customer segments is going to help us continue to win share of users and wallet over time.
Thanks. Our next question comes from Ezra W., who asked, what are the ways you can diversify your revenue and profits from crypto prices? Alicia?
Thanks for the question, Ezra. So I think it's important to start with we're a crypto company. And we're 100%, we're all in on crypto. So our revenue and profits will be intrinsically tied to the overall crypto markets in some form or fashion. However, we can dampen the effect of direct comparison. So today, our largest revenue stream, trading revenues, is directly correlated with crypto prices and crypto price volatility. So we experience that volatility, as you can see over the last 18 months. As prices were rising in high vol in 2021, we generated a lot of revenue. As prices have come down and volatility has come down, we've had trading headwinds this year. So we are very proud of our trading platform, and we recognize that there's going to be volatility given how early we are in this industry. But because of that volatility, years ago, we started investing in new revenue streams, specifically our subscription and services revenues. And this has been comments that you've heard from Brian and Emily earlier, that it takes time to build these great products and for them to achieve scale. But we're really proud that we started planting the seeds back in 2018 with co-founding Center with both to create USDC. In 2019, we rolled out our first staking asset. And you can now see both of these products generating significant growth within our subscription and services revenue lines. In 2020, I think it's important to note that subscription and services was $45 million in full year revenue, $45 million. In 2021, it grew to over $500 million. And this year, our outlook is now over $700 million. And that's despite the headwinds we've talked about in the crypto markets and significant price declines. So we're pleased with the progress we're making. And we think that we need to continue to invest here to create the multi-product strategy. And this will diversify the drivers of our revenue and dampen out some of the volatility we see.
Our next question comes from Manuel O., who asked, how are you planning to detach the share value from Bitcoin value? Alicia?
All right. Different questions, same flavor. So we just talked about diversifying our revenues to reduce P&L volatility from crypto prices. And it's a similar answer on reducing the correlation in our stock coin from Bitcoin. So again, Bitcoin is the largest crypto asset by market cap, and we generate meaningful revenue from Bitcoin trading and custody. So I think there will always be some element of correlation between our stock and Bitcoin. But I think it's important to note that this has not been a consistent relationship. So interestingly, there's some periods of 80-90% correlation between coin and Bitcoin. And in Q3, we had really low correlation. It was approximately 30%. So I don't know how investors are thinking of this, but I think there's a few things that I think are important to note. So one is not all asset managers or large investors actually have the ability to directly invest in spot Bitcoin. And so as the first public company, some investors are gaining access to Bitcoin and crypto broadly via coin. And so they're using our stock as a proxy for how they may or may not have traded the underlying spot assets. We believe as ETFs could hopefully get approved and more crypto companies go public, I can see less correlation between coin and Bitcoin. Further to these trends, we could see less correlation with the development of more institutional trading alongside financing and derivatives markets in the US, where investors could have more vehicles, easy access to short Bitcoin directly, as opposed to Coinbase. Lastly, it comes back to what I said before. The more we can create multi-product strategies with different revenue drivers and diversify our P&L, I think we'll see less correlation to any single coin or crypto overall. And that is the thing that is most in our control to drive that product strategy, deliver value to our customers, and what we are singularly focused on.
Our next question comes from Stephen J., who asks, what software or technological updates does Coinbase have on the way?
Yeah, I can take that one. So, well, first of all, I don't want to pre-announce anything that's coming down the pipe here, but I just can talk generally about what technology updates I think that we have in the process or we have already live that are really powerful for us. So one of them I think is sort of underappreciated is actually our MPC or multi-party computation tech stack. For those who aren't familiar, MPC is a way that you can store crypto securely using different keys in different secure environments. Without getting into the technical details of it, what it does is it allows us to store crypto more securely, in our hot wallet and things like that. It also enables functionality, like in our app, we have something called a DApp wallet, which allows customers, even using our core retail app, to go access Web3 apps and decentralized apps. Sorry if this is too much technical jargon, but basically it allows the customers to go access these third-party apps and participate just like they would with a self-custodial wallet, but they have all the security and protections that they normally rely on within Coinbase. This was a core piece of technology that we developed in-house. We got a lot of key talent came in through the acquisition of Unbound, some real cryptography and cybersecurity experts that made this work in practice. And I think this is going to be actually a really core differentiator for us over time. Other core technology updates, we acquired FairX, our derivatives exchange, and that has allowed us to have some really best-in-class IP in-house to make the most reliable and scalable exchange over time, both on spot and derivatives. I think Coinbase NFT had a really cool update recently where we actually began aggregating listings across various marketplaces out there. And one thing that's really nice about the blockchains and the interoperability of these different protocols is that it allows us to interface cleanly with the various apps and ecosystems, marketplaces out there to build a world-class experience just for our customers using Coinbase NFT. And then, of course, we've been working a lot on a service-oriented architecture and our scalability in the background, especially during this down market. We want to make sure we can get to 1 billion users over time, and that requires a lot of investments in our tech stack. By moving to this service-oriented architecture, it's allowed us it's improved the performance and scalability, but it's also improved the resiliency of our app in the sense that, if one aspect of our app has a problem, it doesn't bring down the whole app. It's generally things would degrade gracefully. And these are the kinds of investments that you've seen in, all major tech companies at scale, Google and Amazon. And it's really seen our tech stack evolve from the startup that we used to be, that we still keep a little bit of that startup culture, but our tech stack now has to be able to serve over 100 million users, and we think that'll be over 1 billion in the future.
Okay, great. We'll take one more question before switching over to the analysts. So Michael T. asked, will my money ever be backed by funds on your exchange in case of theft, and what are your procedures you are taking to ensure safety? Emily?
Thanks for the question, Michael. So we have invested over the history of the company in being the most trusted player in the space, and we take the responsibility of securing customer funds very seriously. I would add that we're proud that we've never had an event where the systems have been materially compromised in any way. And this is because of all of the things that we have invested in since 2012. We have an industry-leading insurance policy for the hot wallet. We have $1 million account protection for our Coinbase One subscribers. We've invested in best-in-class AI and machine learning fraud detection. We have a 200-plus person security team and live phone support and in-app chat. And we'll continue to invest in these things and more. So it is important to note that crypto is a nascent technology, and like many new technologies, scammers will always seek to take advantage of users. So we also invest heavily in educating our users about how to keep their credentials and accounts safe, for example, using YubiKeys and other things.
Great. So with that, Abby, why don't we turn it over to the analysts for questions?
Your first question comes from the line of Lisa Ellis from MoffettNation.
Hi, good afternoon. Thanks for taking my question and good stuff here. I wanted to follow up, Brian, on the international strategy. You had highlighted it, I think, in the shareholder letter that crypto trading volumes have been moving offshore over the course of this year. And I noticed you guys recently added Singapore and the Netherlands, and then you also added zero commission trading for fiat to USDC coin. Can you just kind of tie all of that together for us and holistically talk about how Coinbase is thinking about capturing some of that offshore volume and continuing to expand outside of the US? Thank you.
Yeah, sure. So international expansion is really core to our mission of increasing economic freedom in the world. We want to make sure that we're doing that with a global mindset. And we have seen really good progress on the regulatory front, acquiring licenses in a variety of different locations. I'm in Singapore right now, and we just got our in-principle approval for to hopefully end up with a license here from the Monetary Authority of Singapore, which has been a great step in that direction as well. I think that we have seen the percentage of U.S. spot trading has shrunk from the beginning of this year, as we've seen more of it go overseas. And I don't know the exact reason for that. I think the chilling effect that some of the regulatory environment and the rhetoric there may not have helped. So it is causing us to make sure we have our international markets served even more fully. And I don't want to share anything too much beyond that at this point, but it's important for us to make sure we have global coverage and we are serving customers from the best jurisdictions that we can globally. And we need to see the regulatory environment evolve and get to that clarity both in the U.S. and in other markets where we'll continue to invest. Emily, Alicia, anything you want to add?
No, that covers it.
Your next question comes from the line of Owen Lau from Oppenheimer.
Thank you for taking my question. So based on my math, Coinbase has a loss of about $247 million in adjusted EBITDA year to date. If trading volume or if trading revenue stays at October level and you continue to benefit from rising rate, is there any reason why you have a loss of over $250 million in EBITDA in the fourth quarter? And then without getting into any specific guidance, your adjusted EBITDA loss has been shrinking. Could you please talk about if you have any aspirational goal of achieving positive adjusted EBITDA in the near term? Thank you.
Thanks for the questions, Owen. So as we articulated in our outlook right now, we are just really focused on operating to the guardrail metric that we set forth. And we are being prudent in our expense management. We are prudently trying to grow our subscription services, but we are facing headwinds on trading. So there's nothing that I have to specifically talk about that could be a one-time loss at this time in Q4. But our focus is just managing towards that 500. And specifically, no, we are thinking about investing as much as we can for growth. As Brian said, there's a lot of exciting areas that we can invest in the crypto market, and we want to ensure that we are investing through the cycle, that we're opportunistically reserving dry powder for M&A opportunities. And so we're not immediately focused on getting to EBITDA profitable. We are trying to manage to profitability across a cycle, as we set forth in our S1 when we went public about 18 months ago, that When we're in bull runs, we're going to make profits. When we're in downturns, we're going to take prudent losses, and we do this in the construct of the overall balance sheet capacity that we have. So it is not a near-term goal of ours or focus of ours to drive EBITDA positive in the near term. However, if markets decouple, as Brian said, is a possibility, we could see ourselves return EBITDA, but it's not an intentional goal that the management team is setting forth with.
Yeah, similar to what Alicia said, I think it's important just to kind of touch on and reiterate this point about managing through cycles, right? So last year in 2021, we did roughly $7 billion of revenue and $4 billion of positive EBITDA. And so this year, we're targeting this negative $500 million EBITDA as our guardrail. So you can see that, in up markets, we'll do quite a lot of positive EBITDA, and a down market, we don't want it to be excessive, but I think it's reasonable to have some moderate amount of negative EBITDA and burn there just to continue to invest through cycles, especially given the strength of our balance sheet. So hopefully that gives you a little bit of a sense of how we're thinking about it.
This question comes from the line of Kenneth Worthington from JP Morgan Securities.
Good afternoon. Thanks for taking my questions. I have two on the competitive environment I'm going to try to wrap together. So first, we see Binance offering a number of, I'll say, pricing concessions or promotions. Does the pricing seem to be having an impact on retail behavior that you see as sort of persistent or sustainable? And if so, is it impacting the type of customer that you want on the Coinbase platform? And then second, I know it's still early days for Coinbase One, but it is up and running. How effective is Coinbase One a response for free trading offerings elsewhere? And can you walk us through the characteristic of a target Coinbase One customer and how the transition impacts the overall economics of Coinbase?
Yeah,
Sure.
I can take this from a couple directions. Yeah, go ahead, Emily.
Sure. Why don't I start, and Brian and Alicia, please jump in. I think that to your first question, we do, clearly some competitors can kind of drive market share with zero fees in certain parts of the market. And I just want to reiterate my point about the fact that there's still spread and there's still a fee, and that companies that say zero fee are still generating a spread. We found that when we've benchmarked, we're roughly in line with other companies, and we are not going to compete on price because of the premium nature of our offering. I can't speak to the percentage of users that might kind of go for zero fees on a competitor site, but I can say that the nature of the users that we have is one where they tend to be fairly stickier during these crypto winters. They tend to be hodlers and hold on to their holdings and are less active, but then come back as the market comes back a bit. Whereas there are other behaviors where very active traders might be trading in long tail assets and potentially are more price sensitive and go to those other platforms during these times. Alicia, do you want to add on?
Yeah, there's a couple things I'd like to add on. Thanks, Emily. The first is, and we shared this in our shareholder letter, that even though our retail investors, and Emily alluded to this, are not trading as much, we do not see them leaving our platform. And so when we look at our retention rates of those customers, i.e. the holdings in their wallets, it's very high retention rates, and it's very comparable to the same behaviors we saw in the 2018-2019 time period. And so what we see is that our retail investors just go into hodling mode. They seek out yield. They seek out other activities they can do with their crypto, but they're not converting it to fiat and leaving the platform. They're not sending their crypto to competitors and then trading on those platforms. They may indeed have other accounts away from Coinbase, which we can't see, but we don't see behavior of our customers leaving our platform. I want to touch on the Coinbase One question, though, because we really are excited about this product offering. So the purpose of Coinbase One is to be a product for all of our users, as we think it offers a series of benefits that can enable everybody to have $1 million of account protection. It provides premium customer service. It provides low monthly fee to be able to get unlimited trading and just other perks and access to our platform. So we've seen really good both paid and total subscriber-based growth quarter over quarter. And we have not made these numbers public. It's in our other subscription and services revenue within the breakout of our revenue on our P&L. But we're seeing good behavior, and we're seeing that the ARPU of these customers is higher than our other users once they're engaged with Coinbase One.
Your next question comes from the line of Benjamin Budish from Barclays.
Hi, guys. Thanks so much for taking my question. I wanted to ask about USDC, obviously kind of the biggest driver of your interest income in the quarter. Can you maybe talk about, I know it's a little bit hard to, as Brian said, you can't predict the future, but what's sort of your kind of near to medium term outlook? And maybe can you talk about the things that are within your control? Perhaps, your expectations for, Coinbase generated issuance of USDC. Where do you see the biggest opportunities? Is it retail users looking to use it to engage in DeFi? Is it institutional customers? That would be helpful.
Maybe I'll start with this one and feel free to add on, Brian and Emily. So we made a series of announcements recently around USDC that we think can really help drive adoption. So for example, we want to make USDC more accessible to our global customer base. We have now made the fees commensurate with our US customers in Europe. So customers who want to buy USDC with euros or GBP do not have any fees to do so. We think this will really generate growth for non-US holders of this asset. We've also started to pay out yield on USDC, or reward technically. And we made an announcement with MakerDAO, which is a large DeFi protocol where they're going to bring 1.6 billion of USDC to our platform, and we're going to pay them a 1.5% reward rate. So we think continuing to make USDC, frankly, a better dollar, meaning it's faster, it's 24/7, 365, and now it pays an attractive reward rate, will help with adoption, not only for folks who are looking to have a stable crypto as they think about trading and moving to other assets, but getting access to a US dollar exposure in countries that don't have easy access. So those are some of the growth initiatives that we have within our product control that we're starting to experiment with and roll out. And with regards to our partnership with Circle, we make money in two ways. One is just with regards to the USDC we hold on our platform. So a lot of these initiatives that I spoke to will hopefully grow assets on our platform, and that we would generate revenue through that behavior. And then there's another prong of the revenue share that's based on the percent that we distribute of USDC into the ecosystem.
Yeah,
so growth in market cap, growth in our behavior, and then interest rates are the three drivers of that revenue.
Yeah, and I think your question touched on sort of the different use cases across different customer segments, and USDC has applicability across many different customer segments. So obviously, it's used in trading pairs quite a bit, right? Both in DeFi and with centralized exchanges. So traders use it quite a bit. It's also used by businesses. We're seeing some businesses make, intercompany payments that way, or B2B payments. It's just faster than getting a wire. It'll arrive in a few seconds and with less fees than sending wires. So for B2B payments, I think it's useful. We're seeing some people do payroll in USDC. We're seeing venture investments happen with USDC. And then retail customers use it as well. I mean, not just to earn yield on their dollars that how Alicia mentioned, but there's many people in the world who would like to have a US bank account, but they can't actually access it. But through, a self-custodial wallet or something like that, they can actually hold US dollars through USD coin. So it's applicable across a wide variety of use cases. And as I said in the opening remarks, I think USDC will probably end up being kind of like a de facto central bank digital currency for the US, which is a little different than some other countries that are trying to really create it themselves. So yeah, I think the use cases are many.
Your next question comes from the line of Will Nance from Goldman Sachs.
Hey guys, appreciate you taking the question. I guess I just want to understand, how important do you think it is for Coinbase to be a U.S. domiciled company? If we see so much crypto activity moving overseas, I mean, do you guys ever make the decision, or that you need to be more active in international markets to protect, or potentially even primarily in international markets in order to compete with all that's happening outside of the U.S. and the ecosystem?
It's a good question. Just zooming out. I mean, look, I think it's the right long-term choice to have the parent company based in the U.S. And of course, we have entities in a variety of countries around the world, so we can serve. I don't think we're especially hindered in that regard, in the sense that we can spin up an entity in another region that serves non-U.S. customers, and I think our hands are not necessarily tied in that regard. But look, this was a big decision, even going back to the very founding of the company. I didn't really know. This was back in 2012. I didn't really know how the regulatory landscape would evolve in the U.S. And the thought did cross my mind. at that time was like, should I go create a company in Hong Kong or Singapore or somewhere, Switzerland or something like that. But I made the decision back then to actually build the company in the U.S. And I felt like, look, it may be a bit difficult. It might be a bit more difficult because the U.S. doesn't always act as quickly or nimbly as some kind of like a special economic zone as like Hong Kong or Singapore. But I think it's the right bet long term, right? In the sense that you can read Ray Dalio's Changing World Order. Who knows what will happen in 50 years? But at least for today, the United States is kind of the leading economy, and it's the best place with rule of law and strong property rights and everything to build a global company that can reach the rest of the world. So yeah, I would say sometimes it's felt like we're actually at a disadvantage, and it's caused us to move more slowly than foreign competitors. Some of that, by the way, is just our own execution. That's fully in our control. But other times it's the regulatory environment. It does feel like we're almost facing, unnecessary headwinds, while we're trying to do the right thing, right? Which is definitely frustrating. But I think it's the right long-term bet, and it's going to allow us to prevail as a company that stands the test of time globally. And regulators don't always act quickly, but they do eventually act. And so we'll see that regulatory clarity here in the U.S., and we'll see hopefully a more level playing field emerge globally over time.
And Brian, I would just also add to reiterate this is I think when you see the data so starkly that the volumes are moving offshore, we're optimistic that U.S. lawmakers, legislators, and regulators understand that now is the time to act on very sensible regulation so that innovation and technology and tax dollars can actually happen in the U.S.
Yeah, I think that's right. I mean, that's the message that we deliver a lot in meetings with policymakers is, by pushing so hard on the local companies, you're not actually protecting investors. You're just encouraging them to move offshore to even less regulated options, right? So that's an important message, I think, for all regulators to hear. And even here in Singapore, I've been meeting with MAS and Temasek and GIC and various parties, and there's a similar message here, which is that current Singapore regulators are some of the most sophisticated in the world. They've been very open to having, institutions, crypto institutions operate here and stablecoins, but they were a little hesitant recently on retail trading and self-hosted wallets. And I kind of made the point to them, like, it's incompatible. If you want to be a Web3 hub, which Singapore has come out and said, you can't actually prevent retail trading. You can't prevent self-hosted wallets. Like the only way to access Web3 in many cases is through self-hosted wallets. So they were very receptive to that conversation. They were eager to work with us, and I think it actually created a much more. I hope we had a positive outcome there. So yeah, I think these regulatory conversations are really important globally to make sure things head in the right direction that protects investors, but also preserves the innovation potential of this technology.
We have time for one final question.
Our final question will come from the line of Rich Repetto from Piper Sandler.
Yeah, good evening, Brian and Alicia. I guess I want to be respectful. I am respectful. You've been through a crypto winter, but you have acknowledged, I think, Brian and Alicia, that this, you haven't been through one with interest rates rising like we have. So I guess my question, I looked at the head count. Your head count is down 5%, quarter over quarter, and it's actually up 25% from year end. And I'm just trying to understand, and you got expenses increasing in the fourth quarter. So just trying to see how you sort of felt like you right size, given the sort of the risk and the potential for loss, if we stay in this crypto winter. And, it looks like trading volumes are flat to a little bit down to start. So how do you feel, how did you justify that you right size a company given this volatility?
Somebody else start, Brian, you can add. Okay.
Yeah, I'll start. You feel free to jump in. I mean, so as Alicia mentioned, we targeted this -$500 million for the year, and at least so far we seem to be on track for that. I do think it's reasonable to, given the positive $4 billion of EBITDA last year, to sort of have some kind of moderate negative EBITDA in this down environment. So it's about investing in the future, and we're so far capitalized well enough to do that, which I think makes sense. Now, of course, we're just going to continue to monitor the market conditions. I think, it's very plausible that we'll see a further downtrend in the market in next year. And if we feel that we're not, on track to meet our goals in terms of EBITDA, we're happy to react to that in that kind of environment. But I think right now we're basically monitoring the situation, and we're going to see what happens over the coming quarters. Alicia, what do you want to add?
No, I think that's right. I just wanted to reiterate, Rich, that in our outlook, we speak to 2023 as that we're taking a conservative bias towards the year, and that we think that these headwinds could persist and possibly intensify. And so as we do that, we're doing a lot of scenario planning and understanding what that may mean. We're not prepared to offer a quantitative outlook today. However, I just want to let everyone know that we're committed to managing our expenses prudently and watching the macro conditions and the business performance closely, and that we'll continue to update all of our scenarios as conditions evolve, and we would take additional actions to further manage our expenses if we deemed that warranted.
Great. Thank you all for joining us today, and we look forward to speaking to you again on our next call.
This concludes today's call. You may now disconnect.
All right, team. So that is it for today's video. Again, if you have not already, hit the subscribe button. We certainly appreciate everything here, guys. Also, check out Chart Prime. They are a sponsor of my video as well. Chart Prime is really, really useful because you can use them with whatever futures, crypto, stocks. If I pull up like the E-mini, here, I can pull up the E-mini futures contract. I can use Chart Prime. It shows me bullish and bearish. Like if you find two of these candlesticks together, it can signal an upward move. If you keep looking back, when you have bullish engulfing candle and a reversal signal, it can drop, and you can just use this to find signals in trading. Double bullish engulfing, we get drops. I can't guarantee you're going to make money, of course, but super useful in trading. And so if you want to check it out, I'll post this link, or you can find the link in the description, guys. Thanks everybody for joining us. We will be back tomorrow bright and early as we always are, so stay safe in the market. We'll be back. We got a lot of economic data dropping bright and early tomorrow morning. Carol wants me to go somewhere with her, so I got to get out of here. So hey, love you all, have a good day. We'll see you guys tomorrow.